Friday's rally extends to Monday. Benchmarks scale fresh highs for a second day. Sensex starts the week above 73,000 mark and Nifty soars to 22,000. Broader markets remain firm, mid-cap and small-cap in the green. Meanwhile, Nifty IT skyrockets followed by real estate and PSU banks. On the side, media underperforms. RIL and tech majors spearhead Nifty rally as the market is pricing in softer US macros and Fed rate cuts. Meanwhile, earnings candidates Wipro and HCL Tech soar post Q3. Tata Consumer announces 2 acquisitions. Capital Goods and Organic India will be bought for 5,100 crores and 1,900 crore rupees respectively. The World Economic Forum kicks off today at Davos. Top political and corporate voices to attend the summit. Catch the coverage through the day on NDTV Profit.
Hello and welcome. This is Hot Money. I am Agam Vakil and with me is Hiral Dadia. Hi Hiral. We are looking at the markets currently trending higher, building on the kind of gains that we have seen on Friday, and today is no different. Advances coming through for the Nifty, higher around 0.7%, and while we're looking at a little bit of a tussle between advance and declines in today's day of trade, on the whole, it certainly is a positive day of trade. Now, let's consider the Nifty, right? Because we have seen an advance of nearly 7% on Wipro. When was the last time you saw 7% up move on a counter like Wipro? Well, today is a day, perhaps a historic one after a really long time. And we've seen gains in HCL Technologies, building on the very strong quarter that it has come up with. Tech Mahindra is the other one. Of course, we are awaiting earnings from Tech Mahindra. But besides that, good gains coming in for 2 heavyweights like HDFC Bank as well as Reliance Industries. And that's perhaps it's what is driving the indices higher at the moment. On the losing end, sure, there are a handful of counters which are under pressure. HDFC Life, of course, down around 3.4%. And Tata Consumer, while it did start with a lot of strength, it gave up all its gains on an intraday basis, and it's currently trending in the red. And a little bit of weakness coming in for Bajaj Financial Services. So keep an eye on that, all these counters. Very quick look at the broader markets and how things are panning out there as well. There has been an advance of 0.6% as far as your mid-cap 150 is concerned. The small cap index is also up and about, but not as much as the benchmarks for now. And even in terms of the broader markets, we're keeping an eye on counters like IRFC, another whopping 18% as we speak. What's really going on with IRFC? It's really, something to, take note of for now. Aurobindo Pharma is the other one on good volumes too, advancing, and Oracle Financial Services along with Oil India. In fact, the entire oil and gas space is buzzing at the moment. And BHEL, of course, advances further, up another 2.9% after it signed another MOU with NLC India as well. This time it was for an order worth 15,000 crores. On the losing end, we have a little bit of profit taking as far as TVS Motor Company goes. Sun TV under pressure, down 2.7%, and Dixon Technologies down 2.5%. But all in all, Hiral, while the advance decline ratio is 1:1 nearly, there certainly seems to be a lot of strength when it comes to benchmarks.
Absolutely. And, when you're mentioning the railway pack as well with IRFC, RVNL, Titagar, all of the counters are up and about in trade, right? So there is something which is absolutely brewing with regards to where railway counters are concerned. But on the macro front, you have the WPI inflation data that has just come in at the bottom of your screens. We are at a 9-month high. That's the number that has been indicated. Fuel and power inflation at a negative 2.41. The primary articles inflation at a 5.78 versus a 4.76 in November. So these are the month-on-month numbers. Food inflation at 5.39 versus a 4.69 is what we're picking up. Manufactured products at a negative 0.71 versus a negative 0.64 in November. The core inflation at a negative 0.6% versus a negative 0.4% in November. Clearly, a 9-month high number is what we are tracking at 0.73 versus a 0.23 in November. So an interesting number coming in, Agam, with regards to where the inflation numbers, the WPI inflation numbers are concerned on the domestic front. But let's quickly shift to stock-specific action. We'll be joined by Sharmila, Joshi as well to discuss the names that you will see on the screens. You have the IT pack, which is in focus. So Wipro and HCL Tech are two names that we will be discussing in today's session. Apart from that, HDFC Life, which is trading under pressure on the back of earnings and brokerage reports, and LIC, which is in focus as well on the back of the tax right back that they have seen. Tata Consumers, again on the back of the two acquisitions, will be in focus. Avalon Technologies, eMudra and Good Luck India, last two counters on the back of the fundraise via QIP that are in focus. So see, these are the names that will be in discussion today with Sharmila Joshi. Sharmila, welcome to the show. But firstly, let me head across to my colleague Tushar, who's standing by. Tushar, clearly, it's a mixed earnings quarter overall. But what next? Because, what has the Nifty IT pack so far done according to you?
So what we are sensing here, I'm so sorry. What we are sensing so far here is that the IT pack is... Nifty IT has surged exceptionally high this so far. So the sense that we are getting is that markets are pricing in as like the end of an IT slowdown. So the situation hasn't worsened. Yes, it's a mixed bag, but the situation hasn't worsened. So essentially, what we are looking at is that what markets are thinking this is the end of the IT slowdown. So markets are pricing in softer US macros for the year, incoming year, and Fed rate cuts that will happen. Some of the IT firms have seen green shoots of deal making. Profitability has been maintained despite reduction in the top line. Essentially, they're looking at, say, 1 or 2 quarters. Maybe Q4 will be equally painful, but then after that, they're expecting a lift-off. Quickly, if you look at the big four earnings so far, TCS revenue up 1.49%, EBIT margin sustained at 25%. One big key takeaway, TCS is set to gain in a big way when discretionary spending returns. Remember, it's still not back, but TCS has all the fundamentals in place when there's discretionary spending returns. Infosys, all figures basically in the red. Revenue down 0.44%, margins at 20.50% compared to 21.21%. But the one big key takeaway was that the company has revised its guidance to a narrower band of 1.5% to 2%, from 1 to 2.5% for FY24. So analysts believe that a strong ramp-up of deals in FY25 will propel the growth rate to about 7.5% in FY24. HCL Tech, biggest takeaway, 6% up, an outlier altogether. Key takeaway, it's all down to the ramp-up of the Verizon and the ASAP deals that the company struck in Q2. That is also reflecting heavily in the top line, and going ahead, that only is going to grow ahead. Wipro, fantastic performance by the stock today. Key takeaway, Wipro is seeing green shoots of discretionary spending, and the consulting business, according to the company's CEO, is seeing double-digit growth in the order inflow. So essentially, some green shoots for Wipro after a long time of downturn. Here.
Right. So, Tushar, taking us, through the key takeaways is helpful. But if you have to compare all of the companies which have reported numbers, the big four so far, where does it stack up? And secondly, from a valuation perspective as well, how are you looking at them?
So, let's take 5 parameters or metrics. On revenue growth, all of the companies are in the red, negative growth in Q3, except HCL Tech, 6% up, because for them, it was a seasonally strong quarter. Remember, HCL Tech works in the products and platforms business. For them, Q3, October, December, is the seasonally strong. For others, it's the seasonally the weakest quarter. When it comes to profitability, all of the companies have maintained the profitability at the expected range, which effectively shows that they also still have margin levers in play to keep those profitability numbers high. Total contract value or deal wins, again, a robust 8.1 billion for TCS, and the HCL Tech is 1.9 billion after the Verizon deal that happened in Q2. So again, big numbers there. Still, it's still not converting meaningfully into revenue. We have to look at it in the future. Attrition rates are back to pre-pandemic levels. Net headcount, another key metric, is the fact that all of the companies, TCS, Infosys, and Wipro, have seen their headcount decline in Q3, except HCL Tech, which has added about 3,600 employees just to deploy them to the big deals it won during Q2. Down to the valuation front, the companies are currently trading, as you can see the numbers, at about a fair valuation compared to the 3-year average that we are seeing so far. So essentially, all is looking good for IT at this point of time, but we don't know how the rest of the earnings are going to pan out in the quarters going ahead.
Right. Thanks, Tushar, for getting us the details. Let me get in Sharmila as well. Sharmila, Tushar actually took us through the comparatives and the key takeaways. How were you looking at the IT pack? Because overall, the expectation was muted. And from what's reported and the kind of performance we're seeing, it's spectacular.
Well, honestly, I did expect IT to rally in January. And the signs for it had come in December. When we saw softer data coming in from the US. Because, as you all were just discussing right now, I think one of the key things that you have heard from all the IT majors over this last year and a half is the fact that they are not seeing companies close orders quickly. And the reason why I expected January to be sort of a good month for IT was that I thought that, given the kind of data that we were getting from the US, a lot of the large companies sort of finalized their budget spends in January. So you could actually see a bit of change in commentary when IT companies reported their numbers. Now, honestly, that hasn't happened. But I think markets sort of taken heart from the fact that numbers are okay. We've just heard, how the numbers have been. And the fact that US data continues to indicate that going forward in the year, you could see a rate cut. And let's remember, even for US, it is an election year at the end of the day. So there is likely to be, some amount of interest rate softening, perhaps, in maybe 1 or 2 quarters down the line. So I think market is sort of reacting very positively to that. And I do believe that, a lot of the concerns that got built into the stock prices, given what was happening in the US, that whole debate about hard landing, soft landing. And I think that now somewhere we are coming to getting out of that. So while the stocks have rallied, I do think that, perhaps if you've got a dip or whatever, I do still think that there is sort of money to be made in these stocks. HCL Tech has always been my sort of preferred play. And I think there in this quarter, you really saw that the performance came both from software and services, which was one of the reasons why I sort of preferred this to some of the other large IT names. So I'm happy about that. And I do think that there is an upside in most of these stocks.
All right. Okay, let's talk about another pack which could have possibly underperformed at the moment. And I'm talking about the life insurance space. In this case, specifically HDFC Life Insurance. Before I get in my colleague to talk to us about the earnings and what the brokerages have made, I want to point out that HDFC Life, the first time it moved above the mark of 600 was back in October of 2019. Since then, it has gyrated and moved above the mark of 750 odd levels and once again come back. At the end of the day, over the past 4.5 years, HDFC Life has given you a return of 0%. As we speak, what are the challenges here? That is something that we want to understand. And maybe Monal, who's joining us right now, can perhaps further elucidate this one. Monal, good afternoon. Can you tell us about the earnings as well as what the street is making of these numbers?
Yeah, Agam. Yes, definitely. So actually, what the results that came out on Friday, the net profit increased 16%, but the VNB margins were a little weaker. They were down 2%, which was way below street estimates of around, it was down approximately 7% from the street estimates, which is why the sentiments that the brokerages resonate are more so that they're maintaining their stance on the stock, but all of them have trimmed down their earnings estimates. So their expected earnings, say, City Research has come up with a neutral rating. cut down the price target to 675. Nomura has cut it down to 740. CLSA has brought it down to 700. Jefferies has maintained it at around 800. But the key concern that most of these brokerages are highlighting is the fact that there's been a slower growth in the first 9 months of the year. And this is, of course, on the back of multiple issues that have been plaguing the life insurers. I mean, first we had the budget announcement where they curbed the 5 lakh policies, and also now there's a lot of contention that's happening around the surrender charges that life insurers are supposed to face, which of course has been stated as an overhang by most of these brokerages. Apart from that, Nomura has been saying that it's maintaining its rating because of the company product profile, but it's trimming its estimates because of no recovery or a slow recovery in the high-ticket products. At this point, Tier 2 and Tier 3 development seems to be like the key driving force, but I think Jefferies has stated that that is what is going to drive the AP for the next 2 years.
Sure.
But again, these things are going to be taking a toll on the company.
Right.
The management does say that there's a possibility that they'll recover from this, and their Tier 2, Tier 3 would be their stronger counters. So that is something that we should watch out for.
Okay, absolutely, Mona. Thank you so much for joining us and taking us through the numbers as well as what the street is making of HDFC Life Insurance. Sharmila, a frustrating counter to say the least, but also part of the Nifty, and one where a lot of prospects and a lot of hopes have been pinned on. It really hasn't showed up any results yet. And, you know, even if you consider LIC, that's Life Insurance Corporation, it's outperformed to a tad bit, to a certain extent. What's your view on HDFC Life, and how would you compare that to LIC?
So, first of all, Agam, just a little while back, you gave the return over the last 4 years, and I think that's a little unfair because, the COVID years weren't particularly great years for any of the life insurance companies. Having said that, for the longest time, I've been of the view that while approaching life insurance as a business, you see great growth potential given, our population and how many are buying life insurance, etc. as a product. So my strategy always was to buy a basket of Pru Life, SBI Life and HDFC Life, which is why, I sort of always tracked not very deeply, but tracked their numbers over these last 3-4 years. And I find that actually SBI Life has really outperformed the other two, and they've really given better numbers than both. So yes, I think that HDFC Life, as you all were discussing, a little tad disappointing numbers. And I think that's likely to continue for a bit. So I'm sort of neutral on the stock. I'm not exactly negative because, I like the space. There have been sort of, the last budget wasn't particularly favorable. The last 2 years weren't particularly favorable. So I think they'll take time coming into their own. But, given the fact that we are at the population that we are at, and the percentage of the population that has life insurance as a product,
right,
that would show that we have a tremendous way to go.
Sure. All right. So neutral on HDFC Life, but positive when it comes to the life insurance space. That's the word coming in from Sharmila. We take a small break, but on the other side, we talk about a long list of other stocks that we want to talk about. Stay tuned in.
Welcome back. You're watching Hot Money. Tata Consumer is a stock that is in focus as well in today's session, and that is on the back of the two acquisitions, Capital Foods as well as Organic India. Some cooling off has happened. In fact, now it's trading with cuts of almost 1.4%. And they're also planning a 3,500 crore rights issue. That is what has been communicated so far. Sharmila, how are you looking at the Tata Consumers? One, from the acquisition perspective. Second, the rights issue. And what is the kind of dilution? Do you think that's something which the investors will be happy about?
So first of all, this is a stock that I like, for various reasons. I think that one consistent thing that they've done, if we were to just talk of the news that we have, is that over a period of time, you have seen that they've shown interest and acquired various brands over these last couple of years, and they've over a period of time integrated them into the company. You had that whole Soul Food Foods, etc. Coming to both these brands, I think they're very interesting because Capital Mind is that Ching's and Smith and Jones, and we know that Indian Chinese is a cuisine in itself, and they are the market leader in that. And Organics India is also an interesting acquisition, given the fact that increasingly people are looking at those kind of products. So both will add to their earnings going ahead, and the company is fully expecting that. So very interesting acquisitions. Coming to the stock had actually already sort of rallied, and which is why we are seeing it correct. So I don't particularly think that the rights issue will be viewed negatively, given the fact that the company does seem to be on a bit of a sort of an acquisition and expansion sort of a mode. So to my mind, investors will worry less about the dilution and will look more at the business possibilities that all these things are representing.
Okay. All right. From there onwards, we move on to Avalon Technologies. This is a relatively smaller company, and we understand that the company has tied up with CDAC. That is the Center for Development of Advanced Computing India. Now, what Avalon is going to do is that of course, we know that that's an electronics manufacturing company. And what Avalon is going to do is that it is going to aid CDAC in manufacturing high-performance computing servers. Of course, that's the reason why we're looking at strength in today's day of trade. We are yet to ascertain how big this particular contract can be for Avalon, but it advances all the same. Sharmila, if you track Avalon Technology specifically, your view, even otherwise, what is your view as far as electronic manufacturing services are concerned? How would you go about the sector?
So the space is very interesting. There is no taking away from the fact, and which is why you're seeing markets give this news a big thumbs up. But my concern is more to do with the balance sheet of Avalon and the fact that working capital, etc., seems to be under stress. So those are issues that the company will have to sort of sort and deal with as they go ahead. But perhaps the reason why market is ready to sort of give them sort of the valuations they are giving them is because they somewhere perceive that this is the sort of way to go, and these are the businesses to be in, and which is why market is giving them this kind of a valuation. But very honestly, I think it would be better to be a little cautious. And overall, I would have like a neutral view of the stock.
Sure. So caution, at least as far as the stock's concerned. But on that note, we slip into another short break. But on the other side, we talk about two more stocks which are on the radar. Stay tuned in.
Welcome back. Another stock that we are focusing on today is eMudra, and this is on the back of the fundraise through QIP4. 43.6 is what the issue price is. The floor price is, I beg your pardon. Sharmila, how are you looking at a eMudra? 4% is the kind of gains that we are seeing. And if you look at the dilution as well, I think somewhere in that range of 6.1%.
Yes. So I think once again, like we were talking about Avalon Technologies just a little while earlier, I think that here, even more so, a very, very interesting business model. And the kind of products that they are offering, and I think their usage is only going to increase with a period of time. So, I don't see any concern on that front. So once again, I think, market is giving them the kind of valuation that they are getting, because market recognizes that this Internet of Things and, this kind of e-governance, and these are the sort of companies and models of the future. So once again, I think a stock that I like, the only caution would be a little bit on the valuation front.
Valuations are concerned. That's the only thing one should be watching out for. Thank you, Sharmila, so much for joining us on the show. But we are completely out of time on this edition of Hot Money. Thank you from Agam and myself. Please stay tuned to NDTV Profit for lots more.